So first, I'll share a bit about the organization I work for, Accion Opportunity Fund. We work closely with small business owners to provide them with fairly priced loans, as well as educational resources, coaching, and network support. Our clients have been locked out of traditional financial service offerings in the past, but we are able to provide them fast and personalized service as they grow towards sustainability in their small businesses. And as many of you probably know, Accion and Sam Adams have partnered on the Brewing the American Dream program since 2008. This program has a singular focus on supporting food and beverage business owners with capital, coaching, access to networks, and even promotional opportunities. So this is a national philanthropic effort that's provided over $64 million in loan capital, as well as best-in-class coaching to more than 12,000 small business owners. I'm sure you can tell today's conversation is just one more example of Sam Adams' steadfast commitment to food and beverage entrepreneurs. We are so glad to have such fantastic partners and our colleagues at Sam Adams. I personally really love working with them, and I'm so pleased to be able to provide opportunities like this one through that program. So in addition, Accion Opportunity Fund is thrilled to enjoy a strong partnership with the Massachusetts District Office of the Small Business Administration. And we are so grateful to Dan Martiniello and Carlos Hernandez, lender relations specialists for the SBA, for sharing their time and expertise on this new program with us. Thank you so much for joining us, Carlos and Dan. I'm so pleased to be speaking with you today.
Awesome. Thank you, Meredith. And thanks for everybody taking the time out of your day to come on and join us as we talk about the Restaurant Revitalization Fund. There's a lot of information to go over, and, we'll definitely open it up to questions at the end. So like Meredith said, keep sending in those questions. I know most folks probably know by now that the application portal has already opened up as of within the last hour, basically. So that's a good thing, and we'll try to, give you a full overview of what the program entails when it comes to eligibility concerns, how you can utilize the funds, how you calculate how much funding you could potentially receive, and the different timeframes that are going to be going on within this program. So, stay tuned, sit tight. One good thing too, Meredith will send this presentation out to everybody that is listening today. So, I know we might be, talking a lot on this, providing you a ton of details. So I just don't want everybody to have to think they have to write things down, so fast, because you will definitely get a chance to review all the information that we're providing here today. So we're just going to get right into it. And I'm going to introduce my colleague here at the office is Carlos Hernandez. He's one of our lender relations specialists, and myself is Dan Martiniello. We're two out of the three members of the lender relation team here at the SBA Massachusetts District Office. So Carlos is going to start touching upon, the first half of the presentation, and then I'll take it over halfway through. So Carlos, if you want to take it away.
Hey, thanks, Dan, and thanks, Meredith, again, for hosting this presentation today. So everyone here, I know the big thing on the street right now is the Restaurant Revitalization Fund. I know I was just speaking earlier today how, it was great to, walk back onto the streets of Boston over the weekend and see, the restaurants are opening back up and expanding outdoor dining. So a lot of good information here for you if you're one of those restaurants and you're either, temporarily closed or looking to keep your doors open, and hoping this funding can, help you with that. So one of the big things is, what is it? I guess we'll just start right there. The American Rescue Plan, which was signed back in March, allowed, the Small Business Administration to provide funding here through small businesses through this Restaurant Revitalization Fund. So it's a stand-up program administered through the SBA. So unlike our previous programs like the Paycheck Protection Program, which was done through a bank, this right here is going to be done through the SBA. So that's one important. I know we get that question frequently so far. So there's no bank involvement. It's going to be done through the SBA. And one of the good things about this program too is you can use the funding all the way up through March 11th, 2023. So we'll touch upon that just a bit more, what that exactly means. But plenty of flexibility and a long leeway to expand and expend on these funding. And one thing too is these applications will be approved as received. So once they become approved, there's funding appropriated to them, and they're going to take apps and approve funding until the funds are all exhausted. So it's going to be, time is of the essence here. So it's going to be important that after this presentation that you collect all your information, your documentation, and you're able to submit a complete application as soon as possible. So one of the big things is here when it comes to eligibility. So I know it's called the Restaurant Revitalization Fund, but that word restaurant is very loose when you'll see here what we're talking about, because it applies to any places or businesses that are not permanently closed and where the publics or patrons assemble for the primary purpose of being served food or drink. So you'll notice it includes restaurants, food stand, food truck, food carts, caterers, bars, saloons, lounges, taverns, coffee shops, ice cream shops, bakeries, brew pubs, tasting rooms, tap rooms, my favorite, breweries, microbreweries. You see, it's a long list. So I know if you're calling in, and you probably can't see the full screen here. So let me just finish here. Wineries, distilleries, inns. So it's a very flexible definition they've used to include different types of restaurants. Just a note here, though, if you're a bakery, brew pub, brewery, winery, or an inn, the program is not intended for wholesalers. So with that, though, if you're one of the bakeries, brew pubs, things of that nature, you do have to have documentation to show that at least 33% of your gross receipts are made to on-site public purchase. So one of the big things, just to reiterate again, so it's not intended for wholesalers. It's going to be more for your true restaurant operations. And one thing we did get a question on all the recently too is vending machine operators. So if you do have a vending machine, although it is serving you a drink, but it's not eligible for this program. So who is ineligible, right? So for the term, restaurants, it does include a lot of different entities, but there are some ineligible situations. One is going to be if it's a state or locally or government operated business, and as of March 13th, 2020, owns or operates more than 20 locations. So we don't run into this too many times, but there will be those opportunities where small business has greater than 20 locations, and if that's you, then you're not eligible for this program. One, you has a pending application or has received a Shutters Venue Operators Grant. So the Shutters Venue Operators Grant right now is a separate program. It's a fund as well that is allowing different like theaters, live performance venues to receive a similar type of grant. But if you applied for that or received a fund under the Shutter Venue Operators Grant, then you're not eligible for the restaurant fund. Also, if it's a publicly traded company or you're permanently closed. So this definition here will expand a little bit on, but if you're permanently closed, no thoughts of ever opening back up, you turn in the keys, then you're not eligible for this program. Or if you're a nonprofit organization. And another thing is you're not eligible for funding of at least $1,000. So later today, Dan's going to cover the calculations for a restaurant revitalization fund. So if you can't, if you don't qualify for at least $1,000, then you're not eligible, unfortunately. So how much you're eligible for? So you'll notice that right now the SBA is providing funding up to $5 million per location, not to exceed 10 million total for the applicant and any affiliated businesses. And again, that the minimum award is $1,000. So how is this program different from our other SBA programs? So one thing is going to be key here, I think, for everyone here is you do not need to register for a SAM.gov, nor will you need any type of DUNS number or cage identifier numbers. So I know if you're, anytime you register for any type of grant funding or contracting program through the government, there's a requirement for SAM.gov, and a DUNS number, but there is no requirement when it comes to the Restaurant Revitalization Fund for that number. So that's great for everyone, because I know that process can be a pain sometimes because it's a pretty lengthy. But for this RRF here, the Restaurant Revitalization Fund, there is no requirement for a SAM.gov registration, which is good news. And one thing too, if you are a restaurant owner and you file an ITIN number, it is acceptable for this program. So I know there was some uncertainty. I know from different callers that in past presentations that we've had. But if you are on an ITIN number or you file with an ITIN, you are eligible to apply for this funding. So let's talk a little bit now types of the organizations that are eligible. So if you meet one of these criteria, you're eligible to apply. If you're a C Corp, a S Corp, a partnership, an LLC, a sole proprietor, self-employed individual, you're an independent contractor, a tribal business, or an LLC that's taxed as an S corporation or sole proprietorship, then you're eligible. So that's, it's a long list here of eligible organizations. And I'm sure everyone on the line today will probably meet one of those entity forms. So let's talk now a little bit about franchises. So this is a common question we received. So yes, if you're a franchise owner, you are eligible to apply for this program. One thing you have to keep in mind too is, so SBA, just for our standard loan programs, has this franchise directory, list over, I think, 4,000 franchises on there. So if your franchise is listed on there, then you're good to go. You can apply today. But if it's not listed on that directory, doesn't mean it's not eligible. It just could mean that no one has applied before to be listed. So if you're a franchise owner, you don't see your franchise name on the franchise directory, there are the email link there that you'll send your documentation to your franchisor, franchise disclosure document to the SBA for review, so they can add to that franchise directory. So you can find the directory on our website at sba.gov/franchise. Now bankruptcy. So to cover a little bit about eligibility. So if you're in bankruptcy proceedings right now, it's really, you want to pay attention to this slide, because depending on the status of it will determine whether or not you will be eligible to apply. So what we mean by that is, if you're an applicant that's operating under an approved plan of reorganization under a Chapter 11, 12, or 13, and you meet the previous requirements, then you're eligible to apply. So if you have a plan that's been signed off by the judge, you're good to go. But if you're an applicant that has been, if you're permanently closed, you filed a Chapter 7 liquidation bankruptcy, or you filed either a Chapter 7, Chapter 11, 12, or 13 bankruptcy, but is not under an approved plan of reorganization, then you're not eligible. So if you have that plan and it's approved, it's signed off, that means just your green light to keep moving. But if you don't have an approved plan, then you're not eligible. And there is a note here that says, permanently closed does not include businesses who were temporarily closed their doors due to state or local restrictions, but are still in operation or have reopened. So I'm sure everyone on the line here knows a colleague, a peer, or another business owner that closed their doors due to lack of sales, or maybe the restrictions kept them from operating, and now they're they have plans to keep going. So that's then you are eligible to apply for this funding. But if you're permanently closed and no thoughts of ever opening back up, then you would not be eligible. So how do other SBA relief programs impact this RRF, the Restaurant Revitalization Fund? So this is very important, and it's going to be something that, I believe, over 5 million businesses received some type of PPP loan last year and this year, and restaurants made a high number of those PPP loans. So there's going to be a good percentage that someone on this call receives some type of PPP funding. So if that's you, then you really want to pay attention to this screen here, because what's going to happen is, if you already received funds through the PPP program, they will be subtracted from your applicant's final funding amount. So when Dan later today covers the application calculation, you'll notice that once you receive that dollar limit, you're going to subtract your PPP funding, and that's what you'll be eligible for. And if you received a PPP loan, you must use the same EIN number for that application as you use for the PPP app. So when you're applying under the RRF program, make sure you're using the same EIN number you used when you applied for PPP. And also too, there is another, if you're an applicant who applied for a first draw PPP loan for multiple locations under one EIN and subsequently applied for a second draw PPP loan under different EINs, the applicant must provide the EINs of each entity that receives second draw PPP loans. So I'm being told that there's also going to be a section in the application that allows you to place, the other affiliate businesses in there. And also, upon applying for the Restaurant Revitalization Fund, or RRF, the applicant must withdraw any outstanding PPP applications. So if you have one on the pending right now with the bank, you want to get that resolved quickly, because that portal has gone live today. And also, if the applicant must not have a pending application for or have received a shutter venue operators grant from SBA. So we haven't seen too many of those scenarios there where that someone has received a SVOG grant, but if you have, then you wouldn't be eligible for this program. And also too, there is a certification there in the application that the applicant will be making that says that you're certifying that the current economic uncertainty makes the funding request necessary to support ongoing or anticipated operations. So that's a certification you're making to say, to make sure that only the businesses that have been impacted, will have access to this funding. So what are the eligible uses of funds? And this right here, I think is golden, because you'll notice that the use of funds is heavy, that you can use it for all kinds of uses. Whereas if you're familiar with the PV program, it was very specific on what you could use the funding for. But with this Restaurant Revitalization Fund, they expanded the list of uses. And I think it's going to be one of the most flexible ones I've seen of all of our programs so far. So what this means is you can use it for business payroll costs. You can use it for your utility payments, maintenance, your business supplies, which includes your PPE equipment, business food and beverage expenses, which also includes your raw materials, your covered supplier costs, and your day-to-day operating expenses like insurance, marketing fees, licenses, legal, point of sale equipment. So it's very, very flexible on what you can use it for. And another key aspect about this program is you get that long leeway until March 2023 to use it until, and it also goes back a year. So if you had any kind of like dues or bills that were incurred beginning like February 11th, 2020, you can use these funding for that as well. So it's February 15th, 2020. So if you have any expenses that were or incurred between February 15, 2020 and through March 11, 2023, it's all applicable to this program as well. So like, for example, if you had like back rent from last year, say March or June, July, during when the pandemic was kicking off, you can go back and use the funding that you received today to pay that back rent, as long as it was on or after February 15, 2020. Also too, if the business permanently closes after you receive funds, the covered period will end when the business permanently closes or on March 11, 2023, whichever occurs sooner. And also, this is another thing. So while you do have a long time to use this funding, but any funding that is not spent on eligible expenses by the time the covered period ends must be returned to the government. So, I'm sure you'll proceed with the need there and pay the expenses as they come. But just to let you know that any funds not spent, you'll return back at the end of the program. Also too, though, another thing is when from my understanding is this is going to be one of the easiest programs to monitor on your behalf, because what's happening is you'll go into the website, you'll log in, you'll receive funding, and then what happens at the end, once your covered period is over, you go back, you certify that I used the funding on certain, for the eligible uses, you tell them what it is, boom, you submit it, it's over, right? So, there will be random audits of applications throughout the process too, but it's as easy as that is what I hear. And then once you use that, you'll be able to provide, right there it says, beginning December 2021, applicants are required to provide self-reported, unaudited data detailing use of distributed funds each year through 2023. So it's pretty simple process there for monitoring your funds and reporting on them. But from my understanding is it's going to be very streamlined and easy for the applicant to submit that information. So there'll be more information coming. I'm sure once the program is in full steam. But right now, that's as far as what we know. And this is the part where I'll pass it back to Dan to cover the calculations and documentation requirements.
All right, thanks, Carlos. And yeah, so we're going to continue on with this presentation, and you're going to see that there's going to be a few different ways as an applicant that you'll be able to calculate your funding amount, and what's going to drive which calculation that you end up using is basically when you started your operation. So a couple things to know within the actual program guidance. What the SBA considers when you started your operation is when you had your first sale to a customer. Okay, so it's not when maybe you got your EIN number from the IRS or established your business with the Secretary of State. It's when you actually had your first sale with a customer. So that's going to drive the date of operation. So for calculation 1, you see here, it's going to be applicants in operation prior to or on January 1st of 2019. So what you're going to do to find out how much funding you could potentially receive is you're going to take your 2019 gross receipts, you're going to minus out your 2020 gross receipts, and then minus out any PPP loan amounts you receive. So when it comes to the PPP loan amounts, whether you have used all the funds yet, whether you have gotten forgiveness on your first or your second draw, or you've gotten partial forgiveness on those, you have to minus out that from this calculation, and then you will get your funding amount based on that. So one thing to note too, when it comes to the funding amount, there's not going to be any sort of like negotiation on either SBA's part or you as the applicant. So if you did this calculation here and, it basically, the calculation stated you can receive $100,000 in funding under the RRF program. If your application is approved and there's appropriations left over, the SBA will provide you funding based on that application. They will not come back and say, hey, will you take $50,000 instead of $100,000? Or, in the other way around, you can't ask the SBA to increase it to $125,000. It's whatever the calculation dictates, that's what it is. And as long as your application is approved and funds are still appropriated and available, they will fund your RRF grant accordingly. So as far as calculation 2 goes, so this is going to be for applicants that begin operations partially through 2019. So you didn't have a full 12 months in operation in 2019. So what you're going to do here is you're going to take the average 2019 monthly gross receipts. You're going to times that by 12, and then you're going to minus out your 2020 gross receipts and then minus out any PPP loan amounts you may have received. Okay, so just for a quick example, if you started October 1st of 2019, that's when you had your first sale to a customer, you were in operation for a full 3 months, you're going to take whatever your gross receipts were at the end of the year. Let's say they were $30,000. You'll divide that figure by 3, and then you'll times it by 12. Okay, so that's how you'll start that calculation. According to the program guidance too, you also want to keep in mind that the SBA is looking for folks to prorate, how many months they've been in operation depending on what actual day they started. So let's say, for another example, you started in October 15th of 2019. So you were not in operation for a full 3 months in this case. So what you're going to do is you'll take that same year-end gross receipts figure of 30,000, and this time you'll divide it by 2.5. Okay, so and then times it by 12 and do the rest of the calculation. So they do want you to calculate it based on when you actually started. So if you started at the beginning of the month, the middle of the month, or wherever, just try to prorate that figure based on when you actually started your operation. So another note too here below, you're going to find out in the next slide that applicants that are eligible to use calculation 2 can use calculation 3 if they choose to, if that better suits your needs. But just keep in mind that you'll find out shortly that there is going to be longer processing times for calculation 3, and I'll explain why here in these next few slides. So for applicants, for calculation 3, applicants that began operations on or between January 1st, 2020 and March 10th, 2021, and applicants not yet open but have incurred eligible expenses as of March 11th, 2021. So I want to pause here for a second, right? Let's think about that. This is really opening the door up for a lot of small businesses that may have not been able to receive funding under other COVID relief programs. So like for instance, the Paycheck Protection Program, the PPP, you had to have been in operation and have had to have payroll as of February 15th of 2020, on or before that day, to be eligible to apply for a PPP loan. With this, you basically don't even have to be in operation yet, and you could still, apply for grant funding under this program. So that does open up a door for a lot of folks that, may have been just starting out and, trying to get their operations up and running. And then the pandemic hit and, a lot of delays have caused, but you've also incurred a variety of expenses along the way. So what you're going to do here is you're going to take the total amount spent on eligible expenses between February 15th of 2020 and March 11th of 2021. And then you're going to minus out 2020 and 2021 gross receipts, if it's applicable, and then minus out any PPP loan amounts, again, if it's applicable. So one question we received, well, Dan, for this calculation, what's considered eligible expenses? So going back a few slides when Carlos was talking about the eligible expenses, for how you can use the funds for this program, those same expenses are considered eligible expenses under this calculation. So, if you want to add, payroll as an expense, if you want to add, business loan debt, if you want to add, construction of your outdoor seating, due to like health and safety standards, you need to do that, or any other sort of business operating expenses, you can add all of that into this calculation. So just keep in mind, again, with that, if you fall into that category where you can apply under either using calculation 2, you can also use this calculation 3 if that better benefits your business operation. Due to the SBA needing to actually verify that all of the expenses that you're adding to this calculation are eligible, this is why it's going to take a little bit longer. It's going to require more legwork by the SBA review teams to make sure that, everything being provided, the supporting documentation provided for this particular calculation is eligible. So as far as gross receipts go, what can you exclude from your 2020 gross receipts? So when you're doing your calculations, there's a variety of things here you're going to want to make sure you just take out of that 2020 gross receipt figure. So if you received any Paycheck Protection Program loan, whether it's first or second draw, take that out of your 2020 gross receipts, because you're already minusing that out within whatever calculation you end up using. That's already being factored into the calculation itself. Also too, if you are a current small business, that you may have a small business loan that with one of our lending partners that provided a loan under an SBA loan program, say a 7A small loan or 7A express, you may have been familiar with, over the last year, you probably received a certain amount of payments from the SBA that help pay principal and interest. So they were called the CARES Act Section 1112 payments. If you receive those payments, you want to make sure you deduct that or remove that from your gross receipts. Also, if you received an SBA economic injury disaster loan, so the EIDL loan that we always call it, or an EIDL advance, or some folks called it an EIDL grant, a targeted EIDL advance, or any other grant funds received via the CARES Act, you can exclude that from your 2020 gross receipts as well. And then also on the more local level. So if you received any sort of state grant funding or local, within your town or city grant funding, exclude that from your gross receipts as well. And then the Randolph-Shepard Act Financial Relief and Restorations Payments Appropriation. If you receive funding under that, remove that from your 2020 gross receipts. And what's good too, we'll make sure we send a program guide out to everybody. At the end of the program guide, it provides you definitions of, what we consider, on-site sales, what the SBA considers gross receipts, depending on how your business is organized, what line items you should be looking at on your taxes to figure out your gross receipts. So all of that information is listed at the very end of the program guide, which is roughly about 20 pages, but it's good information to have. So, the real important part, right? How do you apply? Okay, so there's going to be a couple methods that folks are going to be able to apply, and we're under the assumption that most applicants will apply via the online options. So here, as you see here on this slide, option one, you can apply directly through the SBA platform at restaurants.sba.gov. The portal just opened up today at noon on Friday morning, last Friday morning. Folks could start registering, within the platform. But as of right now, you can go in, register, and apply for your business entity. Also, too, if you're working with a select number of point of sale vendors, you may be able to apply directly through their platform as well. So there are a few point of sale vendors that are actually partnering with the SBA on this and actually accepting applications through their own portal. So right now I know it's Toast and Square, if I'm not mistaken, that are actually helping their own clients out with doing online applications through their vendor site. So keep that in mind. If you're a Toast or a Square customer, you want to connect with them and see if you can submit your application in under that method as well. And then the third method would be through the telephone number you see listed here. So the SBA has provided a RRF hotline, which is 844-279-8898. And you can actually apply and have someone assist you over the phone with the application and apply through there. However, you want to just keep in mind, this is going to be take longer. Anticipate wait times and just times as far as processing goes, because this hotline is a general hotline for a variety of things for the RRF program. So whether folks just need help with eligibility questions, or say they have technical issues and then they're calling to get some assistance there, so there's going to be probably a lot of folks calling for a variety of reasons. So, we definitely are trying to encourage people to apply either directly through our own platform or work with their point of sale vendor if they are actually taking application. I think there's only those two. There are a few other vendors that are helping their small businesses with some of the financial supporting documents that may be needed. So I know Clover and NCR, and I think a few others, if you don't have, say, your point of sale reports and that's what you need to submit, you want to contact them and they should be able to provide that documentation for you. So this next slide, we're going to go over generally what documents you may need in order to apply. So everybody across the board, doesn't matter, what calculation you're using, when your business was in operation, the first two pieces of information you see here, everybody's going to need to fill out and sign. And of course, when I say fill out and sign, majority of you are going to be filling out and signing these electronically through either the SBA's platform or through the third-party vendor. So the application is going to be needed to be filled out, which is SBA Form 3172. So need to be completed, initial, and signed. And again, completion of this digitally will satisfy that requirement. And then everybody's going to need to fill out a verification for tax information. So IRS Form 4506T. So that's going to be needed to be completed and signed. And again, if you do it digitally, that will satisfy that requirement. And then when it comes to documentation regarding your gross receipts, so any of the following documents demonstrating gross receipts, and if applicable, eligible expenses as well. So if you're utilizing calculation 3 that we went over. So you'll need business tax returns. So depending on how you file your tax returns, depending on your entity, everybody files, a different way. So you may have to utilize form, IRS form 1120, or maybe you have IRS form 1040 Schedule C, whatever applies to your particular business entity. Keep in mind, when it comes to providing this information to the SBA, when you submit the application, you're going to need to upload the documents with the application on the portal. They want to see your full tax returns with any schedules included. So don't just give them the first page of your 2019 federal tax return. They want a complete federal tax return for, say, 2019. Also, too, you're going to need to provide them bank statements. So the SBA is looking for your 3 most recent bank statements. And with that said, it's not necessarily to find out, okay, do you actually need these funds or not? That's not what the SBA is looking to do here. What the SBA is looking to do is make sure that we uphold the integrity of this program. Because remember, this is taxpayer funding. So this is your money. This is our money, right? This is everybody's, money that's, helping small businesses. So they want to make sure that the funds are going to the proper applicant, the one that's actually applying, for the loan. It's not going to a personal account if it's for business purposes. So make sure that you're providing the SBA, bank statements, typically from a business account that you normally operate your business out of. And then you may also need to, depending on your situation, you may need to provide externally or internally prepared financial statements, such as income statements or profit and loss statements. And then you could also provide point of sale reports, including IRS form 1099K. So this is just, these next few slides are just a breakdown specific as far as supporting documentation goes, depending on the actual calculation you use. So again, the top line items, whether it's your, the application, the tax verification, everybody is filling those out and signing those. And then, so for the calculation 1 and 2, if you're using that, you're going to need to provide your 2019 gross receipts. So you need your tax returns from 2019. Again, reminder, provide the full federal tax returns with any schedules attached. And then 3 months of bank statements. And then for your 2020 gross receipts, you'll need at least one of these documents below. So the first 2 are preferred. So if you've already filed your 2020 federal tax returns, that would be a preference for the SBA review teams. If not, you can utilize your point of sale report. So, contact your third-party vendor and see if they can provide that to you if you don't already have that readily available. Another acceptable method would be to utilize an externally or internally prepared financial statement, such as an income statement or your profit and loss statement, and make sure that you have that signed, dated, and it's certified to the accuracy by you, the applicant, okay? So you may have, say, a CPA or an accountant help you with those types of financial statements, but you wanna make sure you're the applicant, you're signing that they're accurate and dating them, for recent, to make sure that they were recently, done. So as far as calculation 3 goes, so again, everybody's going to need to fill out the SBA form 3172, which is the RRF application. You'll need to fill out the IRS form 4506T for the tax verification. You'll need 3 months of bank statements. Again, most recent bank statements. And then you have your 2020 and 2021 gross receipts, at least one for each year, if it's applicable, right? Because depending on your situation, you may not have gross receipts yet. But what's going to be preferred, again, if you have filed 2020 federal tax returns, that would be preferred. Or if you have your 2020 federal tax returns prepared, but they're not yet filed, you can certainly supply that. Other preferred pieces of documentation you can use is your 2020 point of sale reports and your 2021 point of sale reports. When it comes to eligible expense documentation, so at least one and require appropriate supporting documentation for specific eligible expense type. Right, so this is going to vary depending on your situation, because everybody, utilizing this calculation might be adding in different eligible expenses. So you might have a lot of expenses you put in, you might have you might have a little. So it's going to depend on your given situation. So what would be preferred is if you could work with your CPA, with an accountant, if you have that, and provide a CPA comfort letter with accompanying profit and loss and balance sheet documentation. That will probably provide the SBA a review time that will help the SBA do it a little bit faster. But other acceptable methods, again, similar to the first and second calculation, would be externally or internally prepared financial statements, such as income statements or profit and loss statements, signed, dated, and certified to the accuracy by you, the applicant. And then supporting documentation on eligible expenses. So whether you're adding payroll, whether you're adding, small business debt, providing a recent lender statement if it was small business debt, providing, say, your 941s if you're including payroll, or maybe you had to expand for outdoor seating, providing invoices and payments for that outdoor seating. So that those types of supporting documentation for the eligible expenses. So just some more information when it comes to additional documentation you may need that may apply to your situation. And this comes down to if you are any of the following business entities. So for applicants that are a brew pub, a tasting room, a tap room, brewery, winery, distillery, or bakery, you'll need to, like we talked about in one of the first slides, as far as documents evidencing that on-site sales to the public comprise of at least 33% of gross receipts for 2019. So this may include Tax and Trade Bureau forms, state or local forms filed, or internally created reports from inventory management, sales reporting, or accounting software. So keep in mind, like Carlos mentioned earlier, this program is not for wholesaler type of entities, right? So they want to see at least a third of your gross receipts for on-site sales to the public. For businesses that open in 2020, the applicant's original business model should have contemplated at least 33% of gross receipts in on-site sales to the public. Also, too, if you're an inn, if that's how your entity is identified, you're gonna need documents evidencing that on-site sales of food and beverage to the public comprise of at least 33% of gross receipts for 2019. For businesses that opened in 2020, those applicants are the applicant's original business model should have contemplated at least 33% of gross receipts in on-site sales of food and beverage to the public. So how do you get help applying? Like as we discussed earlier, there is an RRF call center hotline at 1-844-279-8898. You can have someone actually help you through the entire application and do it over the phone with you. Or if you just need general questions, whether you're having tech issues, whether you're just having, you have a concern about eligibility, you can, get that information through that hotline as well. Also, too, you can contact us or depending on where you're located, contact your local SBA district office. We can't physically help you with the actual application itself. We don't have access to log on and look at your application. We can't do those types of things. But, if you have eligibility questions or other program type questions, maybe you're running into some tech issues, if we don't have those answers for you, we can always run that up our chain of command and try to provide you some additional guidance on that. And then also too, you'll see that on the RRF landing page on SBA.gov, help is actually available in multiple languages. From what I know too, the multiple languages is offered at the center hotline as well. So, but if you're going online and you're on the landing page with all the RRF information, just scroll down to the bottom. I think we have close to 30 languages listed in there that will convert all the information to the language that best suits your needs. All right, so we're getting on the last few slides here. So we just want to do some reminders and best practices. So, one, you want to provide complete documentation. So applications with incomplete documentation will be rejected. The review process will restart when complete documentation is provided. Delays could jeopardize the applicant receiving the award. So, just keep that in mind. Like we talked earlier, right now, there's only $28.6 billion appropriated. Now, I say only as if that's not a big number for most of us folks, at the ground level, but nationally, that's not a whole lot of money. So you want to make sure that when you submit your application, it's completed with all supporting documentation. Leverage your resources. While not required, the use of CPAs and other accounting professionals may help ensure a complete and well-documented application. Also, too, for application corrections, SBA is not able to make corrections on behalf of the applicant. So applicants who require corrections, you'll need to contact the call center hotlines and get help and assistance through there. So just keep in mind, you won't be able to call your local district office or call, Dan and Carlos and say, hey, I made a mistake. I submitted everything. Can you fix this? We do not have access to the portal. We cannot make any sort of, changes, unfortunately. So just, when you're in the portal, I know we're telling everybody to rush through things, but just take your time. If you don't know an answer to a question or you're unsure, you can save your application and leave it, and then try to get that answer, whether it's through the program guidance or whether it's through the FAQs that are available, or asking that question through someone at the SBA. So I implore you to, when you're doing the application, try to take your time to make sure you're submitting everything in a correct manner. And then applicants who still intend to apply for a PPP loan. So the RRF applicants are advised to complete their PPP application in advance of the RRF application. So as you all know, we've said it a dozen times already, the application portal is up and running. If you've had a pending PPP application that has not been approved yet, you're going to want to make sure that is withdrawn, because your calculation for the grant is based on knowing what amounts you've already received from the PPP. And if it hasn't been approved yet, connect with your lender that you're working with and make sure that they withdraw that if it's not been finally approved. Okay, so as far as who can apply initially, so what the SBA did is they took a select amount of businesses nationwide and they created a pilot period. And this was to help try to work out some kinks within the application, within the portal, to kind of make sure we have a smooth process starting today. So I think what they did, they selected some participants from the PPP program that identified as members of the RRF priority groups, and they started, working on those applications already. With that said, there's going to be a priority period that starts today. So during the initial 21-day priority period, SBA will accept applications from all eligible applicants. Only applications from small businesses owned by women, veterans, and socially and economically disadvantaged applicants will be funded during this period. And then on day 22, all eligible applications will be processed and funded until the funds are exhausted. But let me just stress again, even though you may not be in a priority group, that does not mean you have to wait till day 22 to apply. They want all eligible applicants, regardless of priority group, to apply starting, within the last hour. So don't sit there and feel that you need to wait 22 days if you don't fit within a certain category. So what are the priority groups? So a small business concern that is at least 51% owned and the management and daily business operations of the applicant are controlled by one or more individuals who are women, veterans, socially and economically disadvantaged. So applicants must self-certify on the application that they meet eligibility requirements. So with the self-certifying, again, we want to stress the integrity of this program, the integrity of taxpayer funds. So, you know, the SBA is not looking for any certification process that maybe some folks on the line may be familiar with certain government contracting programs and opportunities that the federal government runs, and that there's an actual process to certify as a you know, as a woman-owned business or a disadvantaged business. With this, you are just self-certifying, you know, on the application itself. However, keep in mind, the SBA reserves the right to audit any of these awarded applicants at any point in time during the eligibility of when you can utilize the funds. So they may ask for supporting documentation that certifies your you know, claim as far as being in the priority group. So just keep that in mind. Just though, I want to show you an example, you know, as far as you know how your business can be potentially in the priority group. Because like I said, you know, at the top, it doesn't have to be one principal of the business that meets this 51% threshold. It can be multiple owners of the business. So here's an example below. If you have an applicant that had 5 owners who each own 20% of the applicant, 2 of the owners, for example, may be veterans, and one of the owner is socially and economically disadvantaged individual. The SBA in this example would consider this application to meet that requirement, that at least 51% of the applicant is owned by a priority group. So they all don't have to fit, you know, they don't all have to be veterans, and it has to be over 50, you know, they can be a mix of different different entities under these priority groups. And as long as they hit over 51%, you'll be within that group. So some additional information on the definitions of socially and economically disadvantaged. So these are kind of more the basic breakdown of the definitions. We do have an FAQ available that outlines this in further detail, and also provides the Code of Federal Regulations definition of socially and economically disadvantaged. So it would just be, you know, fairly long if we had the full definition, but here's the basic breakdown of it. So socially disadvantaged individuals are those who have been subjected to racial or ethnic prejudice or cultural bias because of their identity as a member of a group without regard to their individual qualities. So individuals who are members of the following groups are presumed to be socially disadvantaged: Black Americans, Hispanic Americans, Native Americans, including Alaskan Natives and Native Hawaiians, Asian Pacific Americans, or subcontinent Asian Americans. And then for economically disadvantaged individuals are those socially disadvantaged individuals whose ability to compete in the free enterprise system has been impaired due to diminished capital and credit opportunities as compared to others in the same business area who are not socially disadvantaged. And then as far as, you know, some continued information on the priority groups for applicants, an entity reorganization for purposes of qualification for the priority period will result in automatic disqualification of the award. So again, this is all about keeping up and upholding the integrity of this taxpayer funded grant program, right? So you know, if the SBA finds that you recently try to reorganize your business to make sure that you fit within a certain priority group, you know, they will disqualify your application. And then, you know, just to get the tail end before we get to questions, there are going to be some set asides for different entities based on their 2019 gross receipts. So as you can see here, there's going to be $5 billion is going to be set aside for applicants with 2019 gross receipts of not more than 500,000. And then there's going to be an additional $4 billion is going to be set aside for applicants with 2019 gross receipts that range from 500, just over 500,000 to 1.5 million. And then an additional $500 million is set aside for applicants with 2019 gross receipts of not more than $50,000. So this program is, you know, also we're trying to make sure that we target, you know, small businesses across the board, and that, you know, as many folks can get help as possible. So the SBA reserves the right to reallocate these funds at the discretion of the administrator. All right, so that is it for the presentation. And Meredith, we want to open it up for Q&A and,
Absolutely.
get that, questions answered if they still have some.
Absolutely. Thank you so much, Dan and Carlos as well, for walking us through all of these specifics. It's so important to get all of these details right. And so I really appreciate how thorough you both have been with us. We do have just a couple of questions that have come in that I want to make sure we get clear on. So for eligibility, Carlos, when you were going over the eligibility and how bankruptcy might interact with being eligible for this program, we had a question come in about a bankruptcy that happened 6 years ago, and this business owner defaulted on an SBA loan as part of that bankruptcy. Is this business owner still eligible for the RRF?
Yeah, that's a good question, Meredith, and it is one that I posed through the SBA, and I guess the response is as long as they have an approved plan in place, right? So, as long as that was taken care of, or they're still in bankruptcy because of that, as long as that plan is approved, you're still eligible. So that it shouldn't have any effect to that applicant.
All right, great, good news. All right, and just a quick note as folks are typing in their questions, we are going to send a copy of this presentation, a PDF of these slides, as well as a recording of this conversation. So you can refer back to the information. Like Dan said at the beginning, no need to take furious notes or anything. But a couple more questions here. So with regard to the documentation required, we have a business owner who owns an LLC with 3 partners. So do all 3 of those partners need to submit tax returns, or just the tax return for the LLC?
Well, so when it comes to the LLC, they're gonna want to see for the actual entity itself. As far as the personal returns, I don't think that they're, and Carlos, I don't know if you saw that, but I don't think they're asking for the personal returns of the principals. It's for the applicant itself.
Exactly, right. So yeah, so it's the applicant business tax returns.
Like when you're filling out that 4506T, they're looking for the tax verification of just the entity, the business applicant, not the principals.
Okay, good to know. All right, and then we had another question on the documentation. I think you mentioned that people who, for their business, use Square as their point of sale can apply directly through Square. So would their transactions through Square work for part of that documentation requirement?
Yeah, so Square and Toast will be able to assist like with any sort of point of sale reports that they have and their transactions through there. So they have their own portal set up for the application itself, and then assistance too with any sort of reporting that's required. From what we've heard, so we've been on a weekly office hours with the team running the RRF program, and they have expressed that, if you work with Square, if you work with Toast, that would probably be the fastest method, because they are geared and ready to have all of the supporting documentation that's required for this program through their own application portal.
Okay, great, thanks. All right, and then the last question that we have here, so we have a business owner who did the math. She added up her 2020 gross receipts plus what she got for PPP rounds 1 and 2. And then that total sum, she subtracted that from her 2019 gross receipts, and it's a negative number. Does that mean she's not eligible for the program, or what does that mean?
Yeah, so that would mean she's not eligible for the program. So this is going to be primarily for folks and entities that their numbers in 2020 went south. Right. So if you had a better year in 2020, I mean, when grand scheme of things, that's a good thing, right? So, but these are for they're trying to help the small businesses that may have been hit a little bit harder. So yeah, if it comes out to a negative number, anything lower than $1,000 is going to be ineligible.
Got it. All right. Well, that's all the questions that we had in the chat for today, and it's all the time that we've got. We're actually a couple minutes over, but I just wanted to make sure we got to all of this really valuable information. So thanks everybody for hanging with us and learning about this program. And then also a huge thank you, Dan and Carlos, and your whole team for providing this information. I just really appreciate you taking the time. And we will be sending out more information about RRF here later today. So thanks, everybody, and you'll hear from us soon.
Yeah, have a good day, everybody. And thank you, Meredith and Accion and Sam Adams, for having myself and Carlos and the district office team on to, let everybody know about this important program.
Great. Thank you. Talk soon. Bye-bye.
Bye.